Traders, welcome to our new free video analysis here on YouTube. If you're not our member yet, make sure to at least to subscribe to our YouTube channel, press a like, leave us a comment, and also make sure to keep an eye on notifications here on YouTube, because next week we will again do a new free webinar. So it's been a pretty big week, very nice moves. Finally, we are seeing US dollar breaking to the downside. We have been discussing about that and anticipated this dollar weakness for a very long time. Not only lower US dollar, we are also seeing a very nice move to the upside on some of altcoins after Ripple won its case against Security and Exchange Commission. So for cryptos in general, we have this US CPI data, which came down came out at 3%, is positive for cryptos in general, because we know that this is bearish for the US dollar if speculators think that Fed is approaching towards the end of the hiking cycle. So that's lower US dollar equals to strong cryptos and other assets. And then you have also this Ripple positive story. So it looks like that cryptos could continue higher, but I will not be discussing about cryptos. If you want to hear more about cryptos, I just posted and recorded a video for members. If you're not a member, make sure to check our offer. We have only 3 days left for this offer. So if you are new to our website, you can get our membership 2 months for the price of one. So make sure to check this out. So in this video, I want to specifically focus on some of the FX markets, and also I will look at the S&P 500 and gold and silver. So dollar index, as we said, is breaking to the downside. I still think that this could be potentially higher degree bearish impulse as long we are trading, let's say, below 102 level or so. So if that's the case, that was then a flat correction here for a wave 2, meaning that current wave 3 to the downside should unfold in 5 waves. So we are obviously in the middle of summer. We are here at very big 100 level. So I'm not really sure if this current dollar weakness will resume. There was a lot of dollar shorts active this week after these CPI figures. So I'm just interested to see what the COT data will be showing for the US dollar, because I also have another wave count, okay, which actually shows the idea that this could be a breakout of a triangle. We talked about this in our free webinars a lot. So this triangle could then also be a very valid view, obviously, could then limit the weakness, because we know that moves out of a triangles are finally in a sequence, right? So if that's the case, then we could experience actually a very nice free wave rally before this market resumes. So I'm interested to see what will happen here at these levels, let's say in the next 2 weeks or so. If suddenly we see a move back above 102, then we know that we are in a corrective phase, and that would be our primary count. But for now, that's still an alternate second count, okay? The first count is this one. As I said, I want to stick with the primary analysis. We're looking for this bearish view, and obviously I want to stay with the current flows. Unless the market does the opposite, then obviously I will adjust immediately. So for now, dollar is still trading to the downside. Also, the US notes are coming nicely higher after failure break here at these March levels. What is the most important here, at least for the near term on the US nodes, is that rise from the lows is impulsive, okay? You have also broken wedge here. So this impulsive rise can either be part of a 3-wave recovery that is still incomplete, or can be part of a 5-wave movement that will take the price much, much higher. So no matter how I look at it, this part here is missing, waves B and wave C, or maybe wave 2 and wave 3, 4, 5 to the upside. So with this very strong reaction to the upside on the US nodes and to the downside, obviously, on the US yields, I think that there is room for more weakness on the US dollar in the next 2 weeks or so, okay? So I will remain and will stick with the bearish US dollar. Also, we are seeing stocks in uptrend. Now here's the S&P 500. Now what's probably the most important here with the S&P 500 at this stage is that, again, even if we think that this rise, okay, will be in 3 waves, and then we will see again a reversal to the downside. You still have to see 5 waves up within this third leg. Okay, so move from that March lows should be made by 5 waves. And if you look closely, that's still only waves 1. You have a wave 2. Looks like extended wave 3 could be approaching some resistance. So more upside should be seen after a wave 4 pullback. So again, this suggests that dollar could potentially stay on a back foot, because we know that higher stocks normally suggest that dollar should weaken. And if you look closely here also on the 4-hour time frame chart, so that's wave 3. We have this 5th wave going on, could be coming out from this not really perfect triangle, or maybe if wave 4 is here, then 5th wave could be a little bit more extended. If this was subwave 1, 2, 3, 4, 5 yet to come for wave 5. So yes, stocks are bullish, but again, keep in mind that this could be a little bit late for some intraday traders to be long. I still suggest to wait on the next higher degree corrective pullback, which could either find a support at somewhere around these swing levels if we see a 3-wave drop into that area. Now also, we have seen a very nice move to the upside on gold and silver. Silver is doing much better, and that's because gold-silver ratio is coming to the downside. And normally that's the case when metals are in uptrend. Silver will try to act much better on the upside rather than compared to gold. And also this comes whenever you have all of the markets in risk on mode, including Chinese yuan that strengthens, and also when you have commodity currencies doing very well, like Aussie or Kiwi, for example. So because we are seeing this breakdown here, obviously silver can be much more attractive compared to gold. And if you look here, silver, we most likely accomplished this corrective decline, and now we are a new impulsive rise. What I like about this chart is that we broke this base channel line here. We even crossed this resistance, which could become a new support after a pullback maybe next week. So if you're looking to be long silver, then watch out for this potential support here at 24.50. Then even lower could be around 24.20 when you had this minor swing high from mid of June. Okay, so I think that after next pullback there can be more upside coming, and simply put, because that's a pretty strong extended move. So normally when you have an extended leg, ideally that leg belongs to a higher degree 5-wave impulse. So I think that we are in the middle of this impulse that can take us even higher. And more importantly, that was a clearly corrective drop here from that May highs. Okay, and since I mentioned earlier Chinese yuan, well, we posted and shared this one a lot on Twitter, even talked about it in webinars. So what we are seeing, very decisive, very strong break below this trend line support. That's again looks like an impulse, so I think that more weakness could be seen. Of course, nothing moves in straight lines. There will be pullbacks, and maybe we are going to see some kind of a head and shoulder formations here if this current support will hold. So maybe we'll now see some slowdown, but then more weakness here is what I would expect. And when dollar Chinese yuan will come to the downside, then I think that Aussie and Kiwi could strengthen. Aussie has made a very nice comeback after being very weak in a downtrend over the last few weeks. Now it's finally picking up and trying to catch the momentum with Kiwi. We have been discussing about uptrend on Kiwi, and so far, as you can see here, we have a very nice, I believe, ongoing impulse. And again, even if I try to focus on minimum expectations, which I normally do, because whenever I look for potential trading opportunities, I want to focus on minimum targets rather than extended targets, because these minimum targets will allow me to make the proper risk reward based on minimum expectations. Okay, so what I'm looking at here, well, I'm observing an incomplete recovery from 60.55. That was low that goes back to end of June, and so far you can see that we have very nice wave 1, wave 2, and looks like that an extended wave 3 is here in place. So even if there would be limited upside from that low, okay, I would have to see firstly completion of a 5-wave movement. So this whole structure, in my opinion, is still incomplete. So again, there can be more upside, and this is going nicely with potential more weakness on dollar index. As we said, Chinese yuan has room for more upside. Metals are in uptrend. Let's not forget that China announced trade talks with New Zealand. So obviously we have a lot of also other reasons that could keep this trade alive to the upside, because after all, higher stocks equals to higher commodity currencies, right? Now also let's take a look on dollar yen. Now dollar yen is making a very nice move to the downside as well. Before we go to dollar yen, I want to look here at the Japanese yen. Now Japanese yen futures, as you can see, has made an aggressive break higher. Of course, Bank of Japan is probably happy with this because they didn't intervene, and still we are seeing Japanese yen strengthening because of inflation in the US came to the downside. So it looks like that for now intervention from Bank of Japan will be removed. But still, looking at this price action itself, it has a very clear pattern. What I really like about this whole price action is that we bounced away from the lower trend line of this downward channel. Okay, so looks like that again, based on minimum expectations, we should see more upside here. Okay, so I will be looking for more upside after any free wave drop, and whenever we have very nice maybe recovery here on the dollar yen, I think that's when there can be some opportunities on the short side. Okay, very nice potential resistance could be around 140. The upper level is 141, which is also the swing high here back from end of May. So maybe even not really perfect, but potential head and shoulders pattern here could be unfolding if we really see this wave to rally, a deeper one from current levels. Okay, if we go from lower prices, let's say that wave, the first leg will extend even lower, then this resistance will be moved even lower here. Okay, then I would be looking for something like that. So again, dollar yen, in my opinion, is in a bearish mode, in a bearish sequence. I believe that higher degree weakness has resumed. More importantly, from last week year highs, we have seen an impulsive drop, and this appears to be like a very nice free wave rally that stopped perfectly at these fib levels. Also, we are already seeing some overlap with this wave A here, which suggests that this cannot be bullish impulse if you try to count it like a wave 1, wave 2, 3, 4, and 5, because this was just too sharp drop for to be wave 4, and also you have an overlap here. So this kind of evidences really suggests that this market could stay on a bearish foot here. Traders, thank you very much for watching this video. I hope that you like this video. Please, once again, subscribe to our channel, leave us a commentary, press a like, and also if you are interested in our services, make sure to check the offer now. We have 2 months available for the price of 1, and this offer will be available only for 3 days. Okay, traders, enjoy your weekend. Bye.